Welcome to the best course on crypto day trading for beginners on YouTube. This is a complete course where I withhold nothing and I teach you everything I know absolutely free, which has helped me and our clients make millions and millions of dollars in the crypto markets. We have countless testimonies with nearly 1,000 members paying us $97 a month for almost a year now to have access to our private community and platform altcoinpro.com. And just this last week, we onboarded another 40 inner circle clients who paid us $14,800 each to have one-on-one access to us, our team, and to take the next step in making millions in dollars of crypto over the next 6 weeks. And we do this every single 6 weeks. And we have case study after case study. For example, one of our members has now gone 15 for 15 in their perpetual futures career. In other words, they turned $9,200 into $17,000 over the last 5 weeks. And here you can see that they're thanking me for helping them to do it. Or another one of our members who goes by the name of Stale Cracker is now 3-0 on their Solana trades, where they're earning between 25%, 29%, and even 37%. And again, you can see right here, he's thanking me for the courses that we put together for them in the back end. And guess what? Again, a lot of the stuff that these guys are learning, you're going to learn inside of this course. Needless to say, this is not supposed to be a subtle pitch for Altcoin Pro, even though we have countless testimonies. It's actually just to prove to you that we actually know what we're doing and can help you become successful in crypto markets like we've helped many of our clients. And in this course, you'll be getting much of what they've learned on the day trading side absolutely free. Seriously, no holds barred. I found the best approach to information is to simply give it all away. So then what's the catch? Well, my goal is that by the end of this video series, you should not only be proficient, but supremely confident in day trading crypto markets so you can extract as much money as humanly possible from the markets and retire from your career or job that you no longer enjoy, or to live the life you've always wanted to, travel anywhere, work from anywhere, fund the bill on your extended family's next vacation halfway around the world, and still have enough cash left over to add a new vacation home to your list of assets. This course is designed to help you trade the crypto markets in a consistent, safe, and predictable manner. So much so, in fact, that you look for new ways to apply your skills and put the money you make in the markets to work. Which by the end of this course, I hope I provided you with so much value that you would actually feel inclined to take the next step like many of our clients and join one of our programs. Maybe some of our live calls I host for the private university members. Try some of our quick win DeFi yield farms to put your crypto to work for you, or use some of the automated institutional grade investment tools we offer, maybe all of the above. And that's the difference between this course and most courses you'll find online. Sometimes they gatekeep information in order to upsell you later. Other times they will share really good info, but it's incomplete because they might be great traders, but poor teachers and didn't build the right structure to help you learn everything you need to succeed. They forget that what's obvious to them might not be so obvious to you and needs to be covered. Other times they simply create a course for the wrong reasons, to look uber smart and uber successful and tout their own excellence for their own glory, using complex strategies and indicators with cherry-picked results in order to win you over as a subscriber or buyer of whatever they're putting out. But in the end, it leaves you feeling like you need more. But this approach of complexity absolutely sucks, and I don't aim to do that. As a matter of fact, I believe the enemy of execution is complexity. So my goal in this course is to simplify every single one of the most important things you'll need to know to go from an absolute beginner to an absolute killer in the crypto markets, and to help you get such phenomenal results with what you learn here that you feel inclined to want to be around other people like you by joining one of our communities. But this all comes with a caveat. This course isn't for those of you who are simply trying to dabble. You can't expect superstar results practicing at an amateur level. As an old mentor of mine used to say, if you treat this like a hobby, it'll pay you like a hobby. And if you treat it like a business, it'll pay you like a business. If anyone could simply learn the basics and the skill set of trading, like reading charts, candlesticks, indicators, then everyone would be rich. It's in the application and the discipline, the learning through tough losses with real money, and your ability to get back up and try again and again and again. That is what differentiates the pros from everyone else. The most difficult thing about all of this will not be the information I teach, but creating a goal for yourself to be consistent and then sticking with your rules and disciplines. So stick around to the end of this course because I'll be sharing the top 10 secrets to becoming a crypto millionaire. These are key principles that virtually every major pro investor throughout history agrees upon, alongside what I like to call the 4 horsemen of technical analysis. That if you master just these 4 things, you could replace your current income from a job or a business within 12 months with enough determination. Finally, each video will be a bit long, but well worth the watch, and my guarantee to you is that by the end of this course, you will have all of the right tools and knowledge in place to not only get your feet wet, but with enough practice and discipline, become a very successful and profitable trader. Now, with that said, in section 1 of this course, I'll cover everything you need to get started as a day trader. And in this video, we will be titling it Crypto Day Trading Secrets. And there will be 4 parts in this section. In part 1, I'll cover the different methods of crypto trading and how to determine your trading style and what works best for you. And below that very first video, you should see a link that takes you to a crypto investor style questionnaire, which is very quick and simple to complete. Or even a simpler version of that would be our Google Doc version that will help you to understand your style of trading and help you determine whether you are a day trader, a swing trader, or an investor. But for the sake of this course, I'll be focusing on swing trading and investing, and I'm obviously going to define all 3 of those. So choosing your time horizon and knowing yourself as a trader, and just in general, your risk tolerance, what's important to you, is going to be extremely important moving forward. And the stuff that you're going to learn in this course is 100% applicable to all styles of crypto trading. In part 2, we're going to teach you how to differentiate between the good cryptos and the ones that are good to trade, the ones that are good to invest into. And actually, even if you head on over to bullrunners.com, again, you can probably find that link somewhere in the description or in the pinned comment below, you can download our free ebook called Altcoin Secrets, where you can unlock the 23 secrets to becoming a crypto millionaire by learning how to identify the next explosive altcoin. A lot of the stuff that we wrote about in this guidebook is the same stuff I'll be teaching in this course, except this goes far more in depth because we simply do not have the time in this entire course to cover every single little detail of an altcoin. But this stuff is truly foundational and awesome. In part 3, I'll be teaching you how to understand and set up TradingView, which is the most powerful charting and technical analysis platform on the planet. This is something that I use in my daily toolkit to track and trade crypto, because I understand that when you hop on over to TradingView, this might feel very overwhelming when you see all of the different variables and options and numbers and lines, and then you hop on over to the super charts and you see things like this, except you have all sorts of options for different indicators. And how do you know which cryptos to choose? What are all of these? How can you use them? So we're going to be diving into that and simplifying it to the point where virtually anyone can hop on here and understand it pretty quickly without all of the needed stress of trying to learn every single little function and feature. We're going to focus on the most important things. Then in part 4 of this first video, we are going to cover how to read a candlestick. Some of you guys might know how to do that, but for those of you guys who are completely brand new, we're going to cover what the different colors mean, what a body and wick mean, and then how to think about them. Then in the next section of the course, we're actually going to dive further into interpretations of these things and even chart patterns. And as a word to the wise, I know most people watching this are going to feel the strong temptation and urge to skip to the second or third part of this crypto day trading course for beginners, but you must resist that urge, because otherwise you'll be making loads of mistakes that will cost you time and money that you could be easily avoiding if you'd simply just watch the first video. It's truly like building a house on quicksand with no foundation. Then in section 2 of this course, and in the second video, I'll be covering top crypto charting secrets, where I will cover in part 1 the psychology of candlesticks, certain patterns, follow through on these patterns, line charts, kind of like the stuff that you see on most investment platforms like Coinbase. In part 2, I'll cover the different time frames and one of the most important principles you could ever apply to all charts in all markets. Finally, in part 3, I'll be covering the most common indicators, kind of like the stuff that you always hear about or most people online use, plus the best practices, the biggest do's and don'ts, and how to use them like a seasoned pro, because most people use them and think about them wrong. This is the stuff that you don't learn anywhere else. Things like volume, RSI, MACD, the stochastic, Bollinger Bands, and even the Fibonacci retracement tools. Now, usually in section 3 is where everything gets fun for most people, because I'll be covering the top trading strategies, which is usually what everyone wants to know right out the gate. But without having a firm grasp of the fundamentals, all of the right tools in place, either way you won't succeed. So please, for the love of all good things on earth, do not skip to this part without having watched the first few videos. Now, in part 1 of this third video, I'll be teaching you how to place limit orders, market orders, stop losses, and the broker or exchange we use, which is not only reliable, but it's also quite robust and safe with loads of options for trading pairs and more. And that will always be linked in the bio or in the pinned comment below. In part 2, I'm going to teach you the basics of what I like to call the 4 horsemen of technical analysis and how to apply them all in tandem, so you only take extremely high probability trades where the odds are actually always in your favor. And as a matter of fact, like I stated in an earlier portion of this video, if you applied just these 4 things, you would dominate the market and likely never need another indicator again, although few indicators can actually be pretty helpful. In part 3, I'll be covering the best or the most reliable chart patterns that consistently prove to work over many decades and arguably for every pro in almost every single market. And we'll be using what we learned in part 2 of this video alongside volume as a confirmation tool to test breakouts, which are basically where you buy the market or you're long because you're bullish. And on the flip side, you would sell breakdowns where you're short because you're bearish. And finally, in part 4 of this video, we'll be putting it all together to help you take your very first live trade with a high probability of being profitable, where to place your stop, how to take profit, and of course, one of the most important things any newbie can learn is when to enter at the proper pivot point where the odds are in your favor. Then in our last section and the final video of this series, we'll be teaching you how to use some of our very own private, proprietary, institutional grade investment tools that are built directly for TradingView and can be used to automate or simplify your investing, and exactly how the institutions do it anyways, because about 80% of all trading now is done algorithmically. This puts you on par with bigger players. And in part 1, I'll be covering one of our tools we call Toro, which is actually the most powerful tool that we offer, which can buy near the bottom of any major crypto trend virtually every single time, even if you started buying at the worst time possible. This is arguably one of the coolest tools that we offer, and it can be completely automated. And just as a base case example, if you started buying Bitcoin at the worst time possible in November of 2021, when Bitcoin hit $69,000 last bull market cycle, and you were just dollar cost averaging over that period of time into the current bull market, you'd actually only be up about 70%, and you would have actually made a decent amount of money, right? But at the end of the day, if you would have used this tool, this blue line right here is actually just the basis, or the average price at which you bought Bitcoin, which came out to a total of $27,000 on a $10,000 yearly budget. You'd own 1.51 Bitcoin, and you'd be up a whopping 325%, which is a far larger gain than 70% using the exact same strategy, buying at the worst time possible in both scenarios. Then in part 2, I'll be covering another tool which we have actually yet to name, we're currently working on and actually improving. This is a day trading tool that's already been profitable to the tune of 24% over the last 365 days on Bitcoin alone. And guess what? We're only aiming to improve it from here. Again, this would be completely automated, but if you had a 100K account, it would have netted you 24K just this last year, shorting the market on Bitcoin in a bull market, which means yes, it's very targeted targeted and snipes really high probability trades. Then finally, in part 3, I'll be showing you Market Radar, which is something that you should have in your toolkit that you would use all the time if you're going to be a day trader using leverage, which is another proprietary tool that shows you exactly how to lever into plays and master risk management so you can day trade crypto futures and contracts like a pro. Now, in total, we have 7 proprietary investment tools, but we're always expanding our suite of tools, and these will likely be the most pivotal for you on your crypto trading journey. So if any of those tools sound interesting to you, you can actually register to be added to a waiting list down in the description below for our next live call, where we will cover these tools in more depth. But without spending more time on the topic, let's dive into the course. So in this very first section, we are going to help you to understand what style of crypto day trading best suits you. It's extremely important to know yourself because, as Aristotle said it best, knowing yourself is the beginning of wisdom, and it would be quite wise to enter markets wisely because all of the fools always get wrecked. I can't tell you how many people I've met over the years that make a quick buck during a bull market. In other words, everyone makes money during a bull market only to lose it all during a bear, and they wish they simply would have done the right things, practiced better risk management, maybe had more knowledge, and they would have actually kept their money. Well, in the same manner, it's important to understand best who you are, what your goals are, how you best operate, what will align with your actual commitments and schedule. So yes, there are very much different ways to enter the crypto market. So by doing this little worksheet that we're going to cover here very shortly, it's going to help you to understand more of what style suits you best. And this is going to help you to enter the crypto market optimally, avoid burnout, and use the crypto market instead of being used by it. This is going to help you avoid the time trap. If the reason that you're entering is to have more income or financial freedom and more time freedom, yet in the process of actually making money in the markets, it requires more of your time, then you're not actually reaching the goal that you entered for to begin with, which is why this is so freaking important. So the 3 styles of crypto trading that I'm going to cover are: 1, crypto investor. This is someone who tends to believe in a specific crypto or multiple cryptos that is showing good strength in the market. And these are the types of people that are looking to learn the skill set of looking at a chart maybe once weekly in order to know whether or not they should be buying more of a crypto or whether or not they should be selling their crypto. But these people tend to hold through an entire crypto market cycle between 2 to 4 years and at least 1 year. In other words, they're consistently treating this more like a retirement account where they're buying and holding an asset over a sustained period of time. That is the very first. The second 2 are more of an income generator. So these are people that are going to be a bit more active. The second being the crypto swing trader. This is someone who will typically hop on the charts between 15 minutes to 30 minutes daily, which really isn't that big of a commitment when you think about it, and is consistently managing or looking for entries in positions. In other words, these are people that are entering trades for anywhere between 3 days to 3 months, and the only time they're in a trade for less than that is if their actual stop loss is hit. In other words, let's say they wanted to enter at $1 thinking the price of the crypto would go up to $2, right? But their stop loss is at 90 cents. And in that exact same day that they enter the market at $1, the price dumps to 90 cents. They are cut out immediately. That is the only time they're in a trade for less than usually that period of time, 3 months to 3 days. Now, the reason it's such a wide gap is because sometimes the swing or a move might last a very long time. In other words, let's say the price of that crypto goes from $1 to $1.25 to $1.50. In a week to 2 weeks later, it's sitting at $1.50. Then 2 weeks later, it's sitting at $2.10. They're going to continue to ride that trend and that momentum or that swing until the chart tells them, hey, it's time to get out. So these are typically people who are trading in spot, and this is actually my bread and butter. But the stuff you're going to be learning in this course is also going to help you become a crypto day trader. And these tend to be people that are in a trade for less than 3 days, and on average, sometimes minutes or even just the day. It really depends on how much leverage you use, what broker or exchange you're using, but generally speaking, these are people who are really more high octane, want to sit on charts, really want to become a master of this craft, and don't really focus on holding any assets or cryptos over a sustained period of time. These are people who are looking for an entry, let's say, onto something like Bitcoin, Ethereum, XRP. They say, hey, this thing is sitting at $1, right? And I know know that it's going to go to $1.05 very quickly. I'm going to enter with a boatload of leverage on a couple $1,000s, a couple $100,000. It doesn't really matter what you start with. What matters is the discipline that you apply behind the start. And ultimately, this can help you to extract a lot of money from the markets. However, I will say becoming a crypto day trader requires more of a time commitment than all of the rest. And it's also a little bit more difficult, but you get really in tune with your emotions and how you operate very quickly. So the real question becomes, which one are you? Which is why I actually put this worksheet together for you. And so directly below this video, you should find a link that will take you to a crypto investing style questionnaire, whether it's an actual survey or just this worksheet, doesn't matter. It's the exact same content. And there will be a list of 10 different questions that I would love for you to answer. And when you do, you're going to tally up the points. So for example, if I answer B for number 2, I'm going to tally 3 points. If I answer C for number 3, then I'm going to tally again 3 points. And so my total for answers 2 and 3 would be 6 points. By the end of this thing, it will give you an answer key. And so if you score between 10 and 16 points, you're more than likely going to be someone that is in the day trader status. If you answer between 17 to 23 points, then maybe a swing trading style might suit you better. And I get it. Becoming a crypto day trader might actually sound more attractive, but I'm telling you, for me, what I found is having more time freedom and still making a boatload of money in crypto markets is the most attractive thing. So the term doesn't matter as much, because at the end of the day, you can make a lot of money as an investor as well as a swing trader or a day trader, because the stuff you learn in this course is going to carry over into every single one of these styles. It's more so just a reference key to help you understand how you're going to operate in the markets. And also, I really want you to read this really quick note on the fact that if you scored something like a 17 or an 18, and that puts you in swing trader status, but you really committed to wanting to become a crypto day trader and you want to spend 2 to 4 to 6 hours on a chart every single day, well, then this doesn't mean that you have to stick with it. This is simply just a reference key. This is something to help you to understand what's best for you based on the answers that you give. So go ahead and do that before you continue on with the rest of this video, or you can do it at the end of this video, but this is something that you're not going to want to skip at all. Now, here is what's interesting. What I've found my bread and butter truly is swing trading. This is actually my income producing activity. Okay, every now and then when I'm highly confident in a trade, I will really lever up and then actually trade it on a 2x to sometimes even a 20x leverage. But this is why this day trading portfolio is far smaller in terms of a percentage of my total portfolio. In other words, I use the majority of my profits that I make from here in order to invest in my future. So this is how I allocate my crypto portfolio. 50 to 60% of all of my actual crypto money, or better yet, my retirement, is in crypto investments that I actually dollar cost average and ride into the end of a major bull market cycle. This is the stuff that I plan to retire on. Now, whenever I'm swing trading with 25 to 30% of my total money, in other words, if you're sitting on, let's just say $1 million, then you'd be swing trading 25 to 30% of that portfolio if you were me. That said, let's say I have a really good couple of months and I actually end up turning this into about 40% of my portfolio because I turned $250,000 into $400,000. Well, then what I would do is eventually reallocate a bit of this capital from here or here into my crypto investment portfolio, where I dollar cost average or wait for dips on some really strong cryptos that I want to invest into over a sustained period of time. But this doesn't have to look like this for you. It could be 100% swing trading, 100% day trading, 100% crypto investments, or a mix of the few. But doing this work might actually help you to feel confident and comfortable moving forward with how you manage your portfolio. Because at the end of the day, I've seen a lot of people go all in on day trading only to blow up multiple times. And by the way, that experience is by far the best experience, but it's also extremely painful when they could have taken some profits and just invested into cryptos over time so they don't lose their entire nest egg on a few bad trades. My goal in this course is to obviously help you to avoid that, but this is just how I allocate or reallocate my portfolio consistently. My goal is always to make more money here and here in order to consistently have this between 50 to 60% of all of my money in the market. Now let's move on to section 2 of this video. So I hope that you're actually going to go ahead and do this work. And again, you can watch this video go through. If you like, you can pause it, but make sure that you don't just stop, because this is a commitment. And by the way, those who are committed will rake money from the markets, but you actually have to do the work. So in this section now, we're going to be covering what's good to invest into versus what's good to swing trade or day trade. In terms of good investments, there are actually very few in the crypto market. And here's kind of a list of criteria that I've put together for you in order to understand the key differences between something that you actually would want to hold for more than a year. So any cryptos that are good to invest into are typically going to be high value cryptos that are extremely unlikely to go to zero. It's important to understand that no crypto investment, just like no investment in the world, nothing in life is 100% guaranteed. In other words, there is a non-zero chance that your investment could go to zero, which is why it's so important to pick safer cryptos that are well established, already have a larger market cap or total amount of money in them. We're going to cover that. So the very first criteria is this crypto that you want to invest into in the top 100 by market cap? And me personally, I still stick with the biggest, the safest, and the best when it comes to crypto investments. Names like Solana, XRP, Bitcoin, Ethereum, so on and so forth. Anything that's below, let's say 80, 90, sometimes close to that 100 range, I'm telling you, sometimes it's here today, gone tomorrow. And I can't tell you over my decade now of crypto experience how often I've seen some really big names and movers and shakers that were gaining rank year over year drop off and do nothing. They actually end up going on a 99% dip and you lose all of your money just by holding it. Those wouldn't be good investments. In other words, a good investment is something that has a larger market cap that is well established, where the market agrees this is a valuable crypto. The next one is, does it have good tokenomics? And we're going to explain these two right here very quickly. And then this third one, is it older than 2 years, is actually easier to see on the chart, which you're going to see in the next section of this video, alongside an uptrend. That said, when we talk about good tokenomics, it's really just the economics of the token. For example, is it completely and totally inflationary? Are more and more tokens entering the market? Because this creates a lot of overhead supply. And I get a lot of this might be over some of your heads. Totally fine. We're going to explain it when we go to CoinMarketCap, which is a really cool tool. But let's just say the max supply of a token is 1 million tokens. Okay. And let's say 800,000 tokens are now circulating or actually in the market. This means another 200,000 have yet to enter the market. And those could be sitting in treasury wallets. They can be sitting in the wallets of the team, the founders, the investors. And ultimately, a lot of these people are going to use the tokens to sell to you, or better yet, dump the tokens on you while you're buying, because that's where they make their money. Tokens, more often than not, are actually launched for companies to make money. Each one of these cryptos, 9 times out of 10, is an actual company, and these founders or people might make very poor decisions about the token or the tokenomics, which could actually harm your chances at making money. So it's extremely important to know that a token is not completely and totally inflationary, that the circulating supply is probably greater than 60 to 65%. There are a few exceptions, but we'll talk about that. And just like Bitcoin, there will only ever be so many in the market. In terms of an investment, I'm far more confident in something like Bitcoin than a Solana, because Solana has a max supply that is truly infinity. In other words, it's truly inflationary. Something like Bitcoin will only ever have 21 million tokens, and that's according to the blockchain that has now been set in motion that can't be changed unless 51% of all the people on the network agree. Now, again, I might be using a lot of fancy terms or things that might lose you, but we're going to explain this very quickly. Next, is the crypto older than 2 years? In other words, if it's less than 2 years old, then it's very likely that it could possibly dump. Now, I only use this as an investment criteria. I actually don't use this criteria when it comes to swing trading, or unless a crypto such as SUI is in the top, 20 by market cap. But generally speaking, I'd like to see a crypto older than 2 years, and we can find that out on a chart pretty easily. And then finally, is this thing in a long-term uptrend? This is something that I'm going to be covering more in depth in a future video in this course. However, an uptrend is a series of higher highs and higher lows. You want to make sure that a crypto is actually doing that over a sustained period of time before you invest. If I see a crypto, a major crypto, even in the top 100, is in a major downtrend over a long period of time, it's putting in a series of lower highs and lower lows, then I don't want to be in it, because then I'm fighting the trend or the ocean. It's kind of like me trying to swim against the current of the ocean. No matter how good of a swimmer I am, whether I'm Michael Phelps or not, doesn't matter. Ultimately, the ocean is always going to win. Why swim against the current when you can swim with the current? And that's exactly what trends are for. So let's explain those first two criteria when it comes to investing in cryptos. What you're going to do is going to hop on over to coinmarketcap.com. This is not a sponsorship for them. They're just a really good aggregator to get all of the data on most cryptos and put it together in such a way that you can see what's really happening in the crypto market for every individual crypto. Many of you might have already heard about this or use it similar to how you would use Coinbase in order to check prices and whatnot. And we'll start with number one, which is Bitcoin. Bitcoin is currently sitting at a price of $123,600. Okay, the current market cap is $2.4 trillion. And there is a circulating supply of 19.9 million Bitcoin. In other words, if you were to multiply 19.9 million by 123,000, you would come up to a total market cap of $2.46 trillion. In other words, this is just the total aggregate amount of money that everyone in the world has in terms of value for Bitcoin. Okay, and to make things very simple, if you were to take and let's say take the market cap, divide it by the price, you'd come out to the circulating supply. If you take the circulating supply, multiply it by price, you get the market cap. And if you were to take the market cap, divide it by circulating supply, it would come out to $123,000. So that's exactly how this works. Now, why is Bitcoin priced at $123,000? It's simple, because everyone agrees it is. The whole market is bidding it up and down. Someone comes in and says, I want to buy Bitcoin. I'd like to hold a whole Bitcoin. The other person says, I'll sell it to you for $125,000. They say, no, I want it at $120,000. These are where we talk about bids and asks. And again, I'm just going to keep this very simple. So eventually they meet somewhere in the middle, and the real price of Bitcoin among millions and millions of participants all around the world comes out to be $123,000, which is what puts the market cap right here. This is by and far the largest market in all of crypto. I like to call this the mothership, and I use this in order to trade often. I use this as a leading indicator into everything else. That said, the next biggest market is about 1/5 the size, which is Ethereum, sitting at a $570 billion market cap, and the third largest crypto by market cap is less than half of that, XRP, at almost $200 billion. And if I scroll all the way down this very first page, you'll see that some of these you might never have heard of, but something like Gala is sitting at 96 by market cap. Why? Because there's only $854 million in market cap trading on this token. In terms of the circulating supply, we're seeing about 91% of all of the tokens that have ever been made, which is 50 billion tokens in the actual market, which is actually a pretty good or a strong circulating supply, which means there's not that much overhead sell pressure. There's not that many tokens sitting in team wallets still ready to go and be sold on you. Now, that doesn't mean that the token's going to perform well. As you can see back in November of 2021, the price of this token was 74 cents. Now it's sitting at literally 1.8 pennies. So just because the circulating supply is very close to the max supply or the total supply, in the case of Bitcoin, the actual token hasn't done that well. So just because a lot of the supply is in circulation doesn't always mean it's going to do well, which is why when it comes to investments, you do have to be very picky. And so this is what makes Bitcoin such a great investment. Not only is it in a long-term uptrend, as you can see, we're putting in a consistent series of higher highs and higher lows. The first all-time high came in, at least when the world found out about it, back in 2017, pumped to $20,000. Yet again in 2021, it pumped to like $69,000. And now in this bull market, sitting at $123,000. So yes, it dumps really hard when it dumps. It's very volatile, but over time, it's been in a consistent long-term uptrend. And as you can see, the actual circulating supply and the total supply, because this is a fair mined crypto, is extremely close to the max supply, and it even has a profile score of 100% according to CoinMarketCap, where you can actually read more on it right there. But generally speaking, my goal in doing this is to just show you that anything in the top 100 doesn't always make it a best investment. Arguably, most of them still aren't. It's just that if you are going to invest, right, just make sure that it's probably in the top 100 by market cap, one, and two, maybe the circulating and total supply are very similar or close together. Now, in the case of something like SUI, when it does have really good technology and you've done a lot of really deep research and homework, and it's in a good, strong uptrend, you can see that the circulating supply right here is still only 3.5 billion of the total 10 billion, which only puts it at about a 35% in terms of circulating supply versus its max supply. But when I see something in a very strong uptrend, and I've done a lot of homework into the company, their partnerships, what they're able to do, their blockchain, all of this stuff that you'll learn over the course of your time as a crypto investor, you'll begin to realize that there might be enough buy pressure in order to eat up the next 6.5 billion SUI. So yes, this is a lot of SUI that's still going to enter the market, but this makes it a pretty decent investment long term. Now, in the case of something like, let's just go to Solana, for example. This token looks more like a good investment for a shorter period of time, but generally speaking, when I see a max supply that is truly infinite, this leads me to believe that there's a lot of tokens that are going to enter the market, and over time, this total supply might actually grow. And by the way, if you're confused at all between total, circulating, or max, go ahead and chat GPT it, or maybe look up an article that explains what the difference is here, because we simply don't have the time to get into every little minute detail of every little single thing. But whenever you see infinite supply on something like this or an Ethereum, it doesn't mean that they're bad investments. It simply means that the demand really needs to be really good, and the token trend needs to be strong to the upside over a sustained period of time. In the case of the top 20 cryptos by market cap, we've already kind of hit that critical mass. So something like Dogecoin has an extremely low chance of going to zero. Something like Chainlink has an extremely low chance of going to zero. Something like SUI has an extremely low chance of going to zero, which leads me to believe that there might be something more than meets the eye to these tokens, which is why they might be better investments than something that's down here at number, let's say 44, 45, 46, you name it. And so now to the section or the part of this video where many of you get really excited. These are going to be the income producing activities, and I would argue if you're watching this series, you're likely going to want to take advantage of what you learn here in order to become a swing trader or a day trader, in order to create income for your investment portfolio, for your lifestyle, to quit your job, whatever the case may be. Now, the difference between something that's good to swing trade and something that's good to invest into is the fact that I actually don't really look even at tokenomics. All I look at when it comes to swing trading and day trading is the chart. If the chart looks really strong, in terms of a swing trade, anything can happen within, let's say, a couple weeks to a 3-month period. Maybe a big whale comes in and dumps a boatload of the token, creates a lot of sell pressure, and here I am stuck on a position that I didn't want to be stuck in, which is why I'm actually a little bit more picky when it comes to swing trading versus day trading, because I'm in and out of the market quickly. On a swing trade where I'm in 3 days, on the higher end between a week to 3 months, and I just put a week here, I average out between 3 days to months on most of my swing trades. And again, being in a swing trade simply means that I'm in this position for a sustained period of time, or a swing and a move, as long as that move continues to make me money. And sometimes that can last multiple months. Other times I get stopped out within the day. But at the end of the day, I'm usually in these things for longer periods of time. 3 days would be a very low end. More often than not, if I'm right, I'm in it for more than a week, which is why I put that there. And I also want this to be a list of higher quality cryptos, which is why, again, I go by anything in the top 300 by market cap. And by the way, this is just a general rule of thumb. You don't have to adhere to it all of the time, but if you don't, you are actually adding more risk to your trading. And by the way, every professional trader that I know is extremely risk adverse. They actually think more about what they stand to lose on every single trade than what they stand to make. And if they play defensively like that, they can really get aggressive when the market's rewarding them by being right and making them money, which we'll talk about more a little bit later in the video. But when I'm talking top 300 by market cap, really straightforward. All I do is come over to the right, go to show 500 right here. And if that's not there for you by the time you're watching this video, maybe they changed the UI Y, UX, whatever. Just scroll to the very bottom of this list right here, which for me, it'll take quite a while. And you should see a link that takes you to page 3. On page 3, which is, the 300 by market cap, you'll see that these are all the cryptos that are the largest cryptos by market cap. And by the time we actually reach 300, we're at ENJ or Engine Coin, which used to be a dominant player in the crypto market and easily in the top like 50 by market cap, now sitting at 300, which is why this wouldn't have been a good investment. That said, it's only $146 million. And if I were to click on this token right here and I scroll down a little bit, you can see here's the volume for the last 24 hours on different exchanges like Binance, Bybit, Upbit, OKX. And we had about 3.5 million traded here. And then the next biggest was Maxi with 1.08 million traded. In general, this token has traded about $21 million in the last 24 hours. So there's enough liquidity in this market that I won't get absolutely wrecked if I try to buy or sell it. Anything outside of that, if you're trading on bigger accounts or with bigger amounts, you could absolutely get wrecked because less liquid tokens, something let's say on the top, I don't know, let's just keep scrolling all the way down and let's go to page 2. Okay, we're going to start to get into some of these lower end names, things that you've probably never heard of or seen before. Something like Maverick Protocol, $43 million market cap. You can see that over the last 24 hours, $57 million has been traded, but it's dumped really hard. So that did get very liquid for a second, but more often than not, I'm willing to bet that liquidity is not that great. Let's go to Cetify. And so this is a good practice for you. Okay, $42 million market cap. You can see that over the last 24 hours, it hasn't seen much excitement. $1.5 million has been traded. And so if I came in, let's just say with a couple $100,000 and I try to buy or sell this token, it would pump the token really hard. I'd experience slippage. I'd lose money on that. On the flip side, yeah, you could be a market mover, but you might get wrecked by someone who really knows what they're doing. And on the flip side, if you were to sell, let's say a couple $100,000 of this token's dumping from 59 cents really bad, okay, because there simply aren't enough buyers in the order books for something like this. And again, I might be using a lot of criteria or, terminology or phrases that might confuse you. My goal is not to confuse you, so let me just keep this very straightforward and simple. When we're talking about swing trading cryptos, maybe just try to make sure that if you're trying to trade that thing in a spot position or less, don't go anything past 300 because that can end up being dangerous for you, especially if you're trading with bigger amounts of capital. And now I'm going to cover the next 2 criteria that I like to use before I swing trade any crypto. And by the way, over time, you'll start to just swing trade the same crypto, so you'll know off the top of your head. You don't have to do all this homework. It's actually going to be pretty straightforward and simple because you'll get to know some key names that you can consistently make money from. And the goal of being in these cryptos is not actually sitting in there and holding them all the time, although I do that for my investment portfolio with high quality names. Generally speaking, my goal is just find an opportunity to enter the crypto and make my money and then get out. My goal is not to hold it, so I don't really care. But still, I like to make sure that these cryptos that I'm swing trading and holding for more than a couple weeks are listed on tier 1 and 2 exchanges. Names like Coinbase, Binance, Kraken, Bybit, OKX, Blowfin, and you name it. And then finally, I like to make sure that the chart doesn't look choppy on the hourly or the 4 hour. So let's dive into those really quickly. Then we'll dive into the day trading criteria and we'll move on. Okay, and so let's say I come into something like, I don't know, I see Theta Network. Okay, I don't know what it is. I do my homework. Oh my gosh, the total supply and the circulating supply are the exact same. All of the tokens are in circulation. Doesn't look like that great for investing. As you can see, we're actually in a long-term downtrend because we have a series of lower highs and lower lows. Again, stuff that we're going to cover in a future video, but generally speaking, this doesn't look that bad to maybe day trade or swing trade. So then I scroll down and I see, okay, it's listed on Binance, it's listed on Bybit, it's listed on a KuCoin. It looks good to go. That is literally all I do. The final criteria I use is actually looking at a chart. And again, this is something that we're going to cover here in this video. So I please don't be confused. Don't be afraid. But this is what a normal chart looks like. This is the price action on Bitcoin. This looks like a very liquid market. All of the price action, all of the candlesticks are very closely tied together. It looks like normal price action. I am on an hourly time frame. But if I were to scroll down and just start clicking through some of these cryptos that are down here that are less liquid, you'll start to see price action or charts that look like this on an hourly or a 4-hour time frame. And as you can see right here, this price action looks very weird. It looks glitchy. It looks choppy. It's very small in terms of its volume, stuff that you're going to learn in the future. But whenever I see a chart like this, I tend to stay away from it on that exchange because it simply means there aren't enough people trading this market on that, and I can actually experience a lot of issues with my orders. I don't want these types of issues. So anytime I see a chart like this on an hourly or 4-hour, I simply stay away. So let's assume that that was the actual chart on something like theta. Then I would simply stay away and I would not swing trade it. And so as a general rule of thumb, if you really want to keep things simple, just go buy anything in the top 300 by market cap and you can trade it, whether it's in an uptrend, a downtrend, doesn't matter. We're ultimately looking to produce income from these cryptos. Okay, the next one and the final one is actually very straightforward, very simple. Anything that is good to day trade is going to be in terms of a minutes to days max. You're usually in and out of the market using a bit of leverage. You're taking profits quickly. You're in it for a quick move, sometimes minutes or even just hours, and then you get out. And so these are cryptos that you would find on an exchange that you're on. The exchange that we use and recommend when it comes to day trading or leverage will be linked right below. But that said, any crypto that is listed on there should be fair game. In other words, anything you can trade on that exchange, it doesn't matter how big the market cap is of that crypto. If it's offered in terms of perpetuals or futures with leverage of 2x up to 20 plus X, you should be fine. But that said, you definitely want to see some good liquidity. So let's just go ahead and explain that really quickly, and then we are going to move on to the next section of this video. So if you were to create an account with Blowfin, and then you actually set up your account by depositing some capital, you can start trading in terms of futures. And so here we are, we're finding ourselves on futures. You would see that there is USDTM futures. In other words, you're literally just using USDT to trade crypto. And for those of you guys who are brand new, you can buy USDT or hold USDT on anything like Coinbase, Kraken, or Binance, which are some of the biggest exchanges. You can actually send it or deposit it directly here by hovering over this little tab right here that says assets, and then click deposit, and you should be able to deposit USDT. Once you do that, you can click right here on USDTM futures. So make sure that you go and look for futures. Once you click on that, because you're going to be day trading, okay, your whole goal is to find cryptos or opportunities that you can actually trade. And I'm going to show you how to set up TradingView and use that and then trade on here directly. So I actually use TradingView in order to chart. And when I'm ready to place a trade, I actually place it inside of this broker. I don't tend to chart directly on brokers or exchanges themselves. I use TradingView. And we're going to keep things very simple. What I'm going to focus on are the assets, because I'm just going to show you what's good to day trade. You can see that there are a lot of different assets you can day trade, or cryptos you can day trade. There's Bitcoin, Ethereum, XNY, AIOU, Sky, K, Carve, right? Which is Carvana, and that's super funny. But generally speaking, you're going to want something that's got a little bit more liquidity and not too little liquidity. So for example, the highest liquidity right now, or the thing that's most being traded on this exchange, is going to be Ethereum, because when I click on the little volume tab here, you can see that there's $1.1 billion of Ethereum was traded on this exchange over the last 24 hours. Then we have $688 million of Bitcoin. So these are very liquid markets. Then you start to scroll down, and if I were to click on the opposite side, let's go ahead and click volume to the upside, you can see that these tokens are really not experiencing that much token volume. So on this exchange, these tokens might be ones that you want to avoid. Maybe trade the higher volume tokens, or tokens that at least have some serious volume. In this case, we had $4,700 traded of GMT. In other words, if I traded more than $4,000 to $5,000, I would move this market, and better yet, market makers or anyone that's on this exchange that is really good at what they do can trade against you and absolutely wreck you. So I tend to stay away from anything that is a lower volume, and I focus on the ones that have many, at least couple of millions of dollars of volume. In other words, Uniswap would be good. You can see that if I scroll over this, Tau would be good to trade, Dot would be good to trade, Pendle would be good to trade. Anything that starts to get into maybe, I don't know, under $200,000 of trade volume is a little bit scarier to trade. It's going to move far faster. People can trade against you. So when it comes to day trading, anything that's offered on your exchange in terms of futures would be totally fine, but sticking with the biggest is probably going to be your bread and butter. And again, as a side note, it doesn't matter which token it is. It doesn't matter if it's TRX, AVAX, XLMC. You're not actually investing in these. You're literally just using these tokens to enter, make your money, and then get out. That is the only goal of being on here, which is why it makes them good for day trading. Now let's move on to the next section of this course. So let's get this video rolling on to section 3, where we are going to really simplify and help you set up and understand TradingView, the most powerful charting platform on the planet. And we're also going to help you to choose the right crypto charts to actually look at, because not all data is exactly the same. Some charts are going to show way more data, they're going to show way more volume, others are not. And the problem with that is if you have 14 different charts of Bitcoin from 14 different exchanges, some might be really good to look at and give you more data, which is going to help you to make better decisions, and others might be incomplete because they simply don't have enough trade volume. And again, we're not going to get into the nitty-gritty of all of these types of issues. What we're going to focus on is simplifying this and helping you to set up TradingView and to understand it very simply. So let's get started. The first thing you're going to do is find a link in the description or bio below or in the pinned comment, and then you're going to click on that little link to get started with TradingView. And once you land on a page that looks something similar to this, they might change the UI or the UX by the time you land on it. You're just going to click on that Get Started button. And right here, you'll see that it is 100% free to use. You might see some ads. You might not be at access to all of these indicators, but if you do decide to upgrade, honestly, all you'll need to start is this essential. What I use is the premium or the expert. I can't remember. There's usually a really good deal if you do it annually, especially during one of their promos that they run sometime during Black Friday, Cyber Monday, or sometime in the summer. But that said, just go ahead and sign up for free as of right now. And once you've done that, by verifying in your email that it is a real email, you can go ahead and see a page that looks like this. I recommend actually getting the marketing emails and offers because they do have really good offers that they will share with you, and they don't typically spam you. Then go ahead and choose your username and click next. And you'll see right here, obviously you won't see this page because I am currently on a different account than my personal one. But that said, I'm just showing you how to set it up. You're going to see this page again where they're going to try to get you to upgrade. You actually don't need to do any of this. You can either scroll to the bottom to get started anyways, or here's the better thing. Just click on TradingView in the top left-hand corner and it'll take you back to the start page, except you're obviously logged in. As you can see, I am right here. Now, because this is a free account, you're going to see everything the way you would when you first get started. And the very first thing we're going to do right here is click on products and go to super charts. And I understand that there's a lot more you can do and click through when it comes to screeners, and it just gets really overwhelming really quickly if you don't actually know what you're doing here, which is why I don't want you to get lost in the weeds with all these tabs. I simply want you to click on products, hover over it, click on super charts. When you do that, you will see a page that looks like this, and it's going to honestly kind of be blinding if you're used to seeing black or dark backgrounds on most screens. It should take you to Apple because it's the largest or one of the largest assets in the world. And here we have our very own chart with live data on the daily time frame. Now, the reason we know it's daily is because we can see that it's up top left right here. It says D. What's nice is back in the day, they actually used to do a lot of advertising here, but now they don't. So the first thing I'm going to do, okay, is we're going to go ahead and remove the volume tool right here. We're just going to click on remove right in the top left-hand corner. Then what we're going to do is go ahead and make this a dark theme because it's a lot easier on the eyes, especially if you're spending time on the chart. So you're going to click on the top left-hand corner and then right here on your name, and you can see that it says dark theme. Click on that, and already it's looking a heck of a lot better. But for the sake of making this even simpler, okay, and again, we're going to choose different cryptos. We're going to make a watch list. We're going to understand what a few of these tools do and just get you in the zone when it comes to using this tool so you can use it daily and simply. In order to get rid of these grid lines and also this line right here, which kind of gets in the way because we already have a cursor right here, we're going to click on this little settings tab in the top right hand corner. Okay, and then you're going to see all of these different options like status lines, symbols, scales, and lines, so on and so forth. The first thing I'm going to do is go to the the canvas. Then from the canvas, I want to make sure that I have a solid canvas, and I'm actually going to remove those grid lines. So we're going to remove them by clicking on the none. And already you can see that it's looking even better. Now right here, every single time I make a change, I'm going to go ahead and save it. There is an auto save function or feature. I personally don't like that because if I do something that I don't like, it'll go away on the chart the next time I pull it up. So I'm going to click that auto save off. You can see that we have an unnamed layout. And so I'm going to name this layout my base layout. Okay, we're going to click save. And so now every time I save it, by clicking on this little button up here, you'll see that it saves the entire chart. In other words, if I were to remove this, let's just X this out completely. We're going to come back here and we're going to go to TradingView. From TradingView, we're going to click on products and super charts because you notice I'm currently logged in, and you'll see that it looks exactly the same because I saved it the last time I was here. So this makes my life a heck of a lot easier when I'm bouncing around on these charts. The next thing I'm going to do is I'm going to again click on settings, and we're going to come back to the scales and lines tool right here, or that tab. From there, we're going to get rid of this line right here. In the case of stocks, you're going to have post-market, pre-market lines. You're going to have the line that's just always in the way back into your chart. On the right hand, you'll see the price of this asset at all times. So you don't really need that line constantly on there because it might actually trick your brain into thinking, oh, that's a support or a resistance. So I'm going to come right here, scroll down till I see symbol, and I'm just going to remove that right there. And you'll see that we still have a blue line because this is pre and post. So we're just going to remove that as well. We're going to click OK, and we're going to click save. And now you notice it's completely gone. But here's the problem. The price also went away. So here's an easy way to actually pull that price back up. You can right click right here on the prices, and I'll go ahead and increase the size so you can really see it easily. And heck, I'll even get myself out of the way. And we're going to right click right here, and you're going to go to labels. Okay, scroll down to labels, and then you can do the symbol name label and symbol last price label. And as you can see, it's sitting there at $233 for Apple on the daily. In other words, the price of Apple on this current chart, which is real data from the NASDAQ, is $233. We're going to right click that yet again, and we're going to make sure that we have the high and low price labels on, and this is going to show us all of the visible data what the high price is of $250 that is visible on the chart, and the low right next to my head over here at about $169. That was the low. So now we have the high on the chart, the low on the chart, and the current price of this asset. If you really want to make it simple, you just right click yet again and make sure that you have that symbol label right here. In other words, we know this is Apple currently sitting at $233 on the price right here. And you'll notice that this is my cursor just hovering over this situation. And if I hover right here, you'll see that that daily time frame closed on August 13th. Okay, over on the right hand side, you'll see $233. This is the price. These are the days. So if I scroll all the way back to, let's just say right here, you'll see the price closed. And we're going to talk about candlesticks here very shortly. Okay, on July 7th of 2025. Now, if you're already feeling overwhelmed because you're seeing these candlesticks and we just covered a lot of different settings, just slow down through this video, pause it, set one thing up at a time, and over time you're going to get very confident in using this tool. But notice I can drag this right here, I can drag this right here, and really zoom into some of these candlesticks, but then it gets really messy. So the next thing I would really like for you to learn how to do is just use this A. So notice I hover over the price, click on A, and that basically creates an auto function or a feature where it essentially automates the way in which your chart shows up on your screen. So it actually fits everything into your screen. We call it an auto fit data. Okay, on the right hand side for crypto, I always recommend you use the L or the logarithmic scale because crypto tends to trend really strongly. And so I'm not going to fully explain this particular function or feature right now because it would be a lot. But just for the sake of this example, anytime you don't see the logarithmic on, see the L right here, it's not turned on because it's not white, or any color for that matter, maybe black if you're using a white chart. You just click the L and make sure that it's A and L. So anytime I zoom into an area, notice it's always going to fit all of the data on the screen when I have the A on. If I turn the A off, or better yet, if I start zooming in like this and it gets really messy and I'm like, uh-oh, I don't see everything on my chart, just click A and it'll fit everything back onto your screen. So already we're starting to see a really nice chart here. The next couple of steps are going to actually be pretty straightforward, but are going to be very helpful when doing charting and for the rest of this course as I teach and train you more. So we're going to go ahead and click save right up here. And again, anytime you log out, it should always be fixed to these exact functions and features that we've already set up. And so now we have a very clean chart, and now we're going to teach you just a little bit about where to find some tools that you're going to use quite often and virtually every trader uses, as well as how to find indicators and change the time frames. But first, I'm just going to switch over to Bitcoin because from now on, we're going to be charting on cryptos, and then I'm going to teach you how to find the best crypto charts for every single crypto that you want to trade. So as you can see, we now have the price chart on Bitcoin. I'm going to go ahead and just remove the BTC USD over here because I know I'm on Bitcoin by looking in the top left corner. We're on BTC US dollar. So I'm going to go ahead and right click yet again and actually turn that symbol name label off. So it's very clean chart. You can see that the high is right here. You can see the low that is visible on the chart is over here. And you can see the current price is $121,000, about $400 on each individual Bitcoin. The first thing I'm going to do is teach you how to set up your different time frames. So each one of these candlesticks represents a single day. And we're going to go ahead and explain this a little bit further here in the upcoming video, as well as what a candlestick is here very shortly. But for the sake of this example, I'm just trying to set this thing up for you so you're ready to go. Okay, I'm going to scroll down by clicking on this D because we are on a daily time frame, and I'm going to add a few different things on this chart. The first thing I'm going to add in favorite is that 15-minute time frame. We're going to go ahead and favorite that. We're going to go ahead and favorite the hour time frame. So notice right here, I just hover over that time frame and click on the little star. I'm going to hover over and favorite the 4-hour time frame. I'm going to favorite the day, okay, and then I'm going to favorite the week. And so now you'll see that up here we have some easy visible options. If I click on the W, each one of these candles is going to represent 1 week of time. In other words, if I hover over right here, for example, this week on the candle was Monday, July 21st of this year. Then we go back and guess what? This other candle is 7 days prior, another 7 days prior on the 7th. Guess what? This was the 30th. This was the 23rd, so on and so forth. Okay, if I click on the daily, each one of these represents a day. So it's showing me the exact same data because over on the right-hand side, you can see the price is $121,500. And if I click on the 4-hour time frame, it's still the exact same price. I'm just getting more data in terms of what happened during that day for every 4 hours. In other words, 6 of these candles represents 1 daily time frame. So when in doubt, and essentially here's the rule, zoom out. And we're going to talk about that a bit more, but just clicking through each of these time frames is quite nice. And now you can easily zoom in or out on any single chart and see what's actually occurring on that chart. Again, because I've done all of this, I'm going to click over here on save. So now I'm going to go ahead and go back to that daily time frame. And again, I always just like to make sure I have the A and L on. And on the left hand side now, you're going to see some drawing tools. Okay, I'm not going to explain because there's a lot of different drawing tools that you can use. If you click on one of these, for example, just over on the little right hand pattern right here, so let's say on that third one down, you click on the right side, you can see that there are so many drawing tools that you can literally just pull things up and interpret on the chart. But for the sake of this video, we're going to keep things very simple and really teach you the only stuff you really need to know anyways in terms of the 4 horsemen of technical analysis. Okay, the first thing I'm going to use is this cross. What I love about the cross is it creates this crosshair, because if I use the dot, you'll notice that although I do have a crosshair right here, it's usually just going to show a little dot. So I tend to really like the cross and I favorite it. Now, when I favorite that, you'll notice this little guy pops up right here somewhere on your screen. And you're going to notice this is my favorite drawing tools tab. Okay, I'm going to scroll down to the second one and I'm going to add a few different ones. I'm going to add the trend line, the horizontal line, the vertical line, and that's about all I need from this entire deal. So now you can see I have 4 different tools on here and I can click on them at any point in time and draw things. Okay, I'm going to remove that. You can see that if I take the horizontal line, I can draw right there. And that's about what we need from that one. Then if you scroll 5 different drawing patterns down, right to the one that looks something like this, and you just click on the right hand side again. We're going to add a few different things. We're going to add the price range and date range. So let's go ahead and favorite those. You'll notice they pop up. And finally, if we really want to get a little fancy, you guys can go ahead and add a few different things. I recommend that you use potentially that brush as well as the rectangle. So now we have some drawing tools right here. The rectangle is basically going to be a tool that looks like this. Okay, and again, we can change all of the visibilities and the settings and the way they look. These are just drawing tools. I can do whatever I want on the chart with them. This price range tool, okay, is just going to show me the price range from the low to the high of a range that you can see is 47%. If I drag it from the top on down to the bottom of the range, and let's get out of the way here, you can see that was a 30% dump. And again, we'll explain these over time and use them in this course and tutorial. Okay, from this high right here on January 20th of 2025, if I go ahead and get out of the way right here, January 20th of 2025 right here, you can see, and I drag it all the way over to this present day right here on May 22nd, that was about 122 days of downside price action before the market recovered back to that prior range high. And again, if any of this feels a little overwhelming or confusing, just stick with me. I'm just doing a very quick tutorial on how to set this tool up, because we're going to dive more into how to actually use this stuff. But now we've got a bunch of random drawing tools, right? A lot of people, when you see them drawing trend lines online, you'll see them just taking a tool like this and dragging it through the range lows right here and then interpreting how they want. You can see that this truly looked like a little bear trap, because we have a consistent range and a pattern where every time we touch this range, we break for some new highs. Guess what I did? I literally dragged it and made it myself. That is what we call a drawing tools. All of these are drawing tools. This little paintbrush, by the way, I can draw whatever I want. Okay, I'm going to remove that right there, but that's basically what that is. And so now we have all of these drawing tools right here, and you can drag and rearrange them however you want. But for this reason, I'm just going to end it right here. These are the tools that you want to add to your favorites drawing tool tab, because these are going to be your best friends when doing technical analysis. You do want to know price ranges. You do want to know date ranges. Having a rectangle tool is quite nice. Drawing your own things on the chart is quite nice. And then a trend line, horizontal line, vertical line, and anytime I'm on one of these and I don't want to draw a trend line, I just click back on the cross, because then I can just drag and drop things, okay? So that's basically what we're doing. Notice if I click on the chart somewhere and pull it from one side to the other, it's going to move the entire chart. If I drag this right here, it'll do that exact same thing. And then I can zoom in using my cursor or mouse. So here we have our drawing tools, the favorite tab right here, and I'm going to end it with the drawing tools there. Now, in the future, we're going to cover some indicators, but to make this thing really simple and straightforward, where you find indicators is right here. Okay, you're going to go ahead and click on indicators, and you'll see that there is a plethora of indicators that are actually a lot. They're overwhelming. There's going to be, a bunch of ones from the community and patterns and strategies. Just to keep this thing simple, we're just going to type in volume. Okay, and right here, you can see that volume pops up. I'm going to go ahead and favorite that one, and we're going to click on that. And by the way, if you want a little explanation, it'll show a description right there. We'll just click that right there, and you can see that volume has officially showed up on the bottom of our screen and chart. If I want to remove that at any time, by the way, all indicators will appear here. So for example, because I favorited it, now I have a favorites tab that just appeared. It was not there before, but now I'll see all of my favorites that I really like right there. We're going to go to technicals again. And if you want something like, let's say, the RSI, or the relative strength index, you click right there, you can favorite it, and guess what? It appears at the bottom of your chart. If I want to get rid of it, and again, I know there's a lot of information here, but I'm just covering indicators now. So we covered drawing tools, we covered how to set up and make the chart pretty. Now we're just gonna add a few indicators so you can see how they work. I can collapse the pane right there, and you'll notice that RSI is still down here on the left. If I want to make it go bigger again, I just click on that restore pane, which is directly directly behind me. I moved myself to get out of the way, but you'll see that it appears right here. Again, I can collapse the pane or restore it or simply remove it. Some indicators will appear at the bottom of your chart as a new chart themselves, where I can drag and drop this and make it look better. You'll notice my cursor's right on this line right here that separates this chart area from this chart area. And if you have multiple of those, it really starts to get in the way of your chart, especially if you don't have a big screen like me. So sometimes it's actually quite nice to simply go ahead and collapse that pane. And then when you're ready to pull it back up, you just click on restore pane and you can really zoom in. Another thing that's kind of helpful on this tool is if I double click right here, you'll see that I can look at this entire thing and you're like, uh-oh, where did my chart go? Just double click anywhere on here yet again if you're not directly on a line or something. And right here, it'll pull that screen back up. And again, notice how my chart looks really kind of not great. If you just click auto, it'll make it look a heck of a lot better. So let's go ahead and actually remove the RSI. We notice some indicators pop up directly on your chart. So for example, if I go to indicators and do EMA, or a moving average exponential, a lot of you guys know what that is. You'll see the EMA actually occurs or appears directly on my chart. And so anytime it does, it will show up here. I can change the setting by doing this. 10 or better yet 20, and a 20 is a longer moving average, so you can see right here, okay, we've got a longer moving average. Let's go ahead and click save on that. And now we've got the EMA up here. We got the volume here. I'm going to remove them from the chart because I don't want to cover indicators too in depth right now by just clicking on this hide tab right here. We're going to click save. Now I understand we've covered a lot and we really have, but once you get the feel for this tool, it's actually quite simple. So on the left hand side, we have our drawing tools. We favorited those. We found out how to bounce between different time frames right here, right up here. We've learned how to pull up indicators, and we've even learned how to make our settings and chart look really clean. Now what we're going to do, again, just to be safe, is save this layout. In other words, if you close this tab and you open TradingView again, go to super charts, you're going to find it looking exactly like this in the way that you left it, which is absolutely beautiful. The final thing I'm going to do before we actually dive into how to pick the right cryptos and create a watch list is click over here on candles. You see this little tab right up here? It says candles, and I'm just going to show you what this looks like. So right here on the candles that we're looking at with Bitcoin, which again, we're not going to explain all of this. You can see that the high of this range was right up here. You can see that the low of this range was right down here. The candles are smaller than the highs and the lows of these wicks, a line that I'm literally drawing on the chart to track this trade. And so you can see that the highs that I'm making and the lows that I'm actually drawing to are not actually going to show up when we look at a line chart, because line charts look slightly different. And this is the stuff that you're typically used to seeing over on, let's say, a Coinbase or any trading app. That would look like this line chart right here, or better yet, an area chart where you see it look like this. But the reason I like candlestick charts is because they give us more data. We actually get to see, where did the market open at? Where did it close? But not only where did it open and close, we also see the highs and the lows of the range, which line charts do not do. So if I were to remove that drawing and just draw this line chart based on what we're seeing with the lows and the highs, it would look something like this, okay? And it'd be far less volatile looking than what I actually drew, because I'm only tracking to the opens and the closes of these things. Or in other words, I'm actually drawing on the body. So if I click over on the settings tool and I just remove the wicks, for example, you'll see that I'm drawing very close to the bodies and not the wicks. And again, we're going to cover candlesticks here in the next section, but you'll see right here, if I go to that tab and then click on area, it's going to track really close to my drawing because that's where the closes were, or even the line charts, the exact same thing as the area chart. There's a lot of different charts you'll see here. You won't be able to use all of them, I don't think, on different time frames, but not a big deal, because the only thing you really need to focus on to become a pro before you start to understand all of this other stuff and actually extract money from markets is the candlestick. I'm going to go ahead and turn those wicks back on by clicking on settings, click on wick. And guys, this is such a powerful tool that I can literally make it do and and look exactly the way that I need it and want it to, but take it from a pro over here. This is the easiest way to set this whole thing up and really understand the crypto market. So we're going to go ahead and click save now. And that's about all we need to do right now in order to have our chart ready to go. The next thing we're going to do on TradingView is set up our watch list. Okay, so we're looking really good on this chart. Now what I'm going to do is just click back on that daily time frame, log and auto it out, and we have Bitcoin right here. Now on the right hand side, you're going to see a ton of different options. Do not get lost in all those. They're really not necessary for this stage of trading. And ultimately, you don't even need them most often. I rarely, if ever, use anything down here. The only thing that I constantly use almost every single day is this watch list. And when I click that open, you're going to see that it has all sorts of different options like indices, stocks, futures, Forex, and crypto already loaded in there or preloaded for you. If I drag this little line right here, you'll see that it moves my watch list. I'm going to go ahead and click that again, and you see it disappears. So what I'm going to do is make this watch list my very own, and we're just going to leave it as watch list because on a free account, that's the only watch list that you can have before you actually have to upgrade. And because we're not trading indices, we're not trading stocks, we're not trading futures, this is a crypto day trading course, we're going to remove literally all of these. So I'm just going to click remove on every single one of these, including the crypto, to the point where my watch list looks like this. It'll say, you have literally nothing there. And I am totally happy about that now. I've got the last price, I got the change percent, I got the volume, and the symbol right here. Again, this might look confusing, but you're going to understand it as we go along in this course. And so what I'm going to do is I'm going to add my very first symbol. And the very first symbol for this entire course is obviously going to be none other than Bitcoin. Now, when I go here to add symbol, you're going to notice that there's tons of different things I can click on. And the goal is really to just find what we're looking for. You can either click on crypto, or you don't have to do that at all. But what I always focus on is just typing in the proper ticker with USD or USDT. Okay, US dollars Tether are sometimes the largest trading pair for any crypto and the oldest, which is where I get the most data. So I'm always going to use USD or USDT pairs. And so the first thing I'm going to do is head on over to CoinMarketCap yet again to find the actual ticker of each token. So if I scroll down, I'll see that the Bitcoin ticker is BTC. In other words, if I go back to TradingView, go back to my watch list and type in BTC, you'll see that a million different pairs show up. You'll see an index shows up, US dollars, USD, Bitcoin futures on CME. These are all the different exchanges that the Bitcoin pair is listed on. And the reason it's called a pair is because you're trading Bitcoin against the dollar. So one Bitcoin equals how many dollars? Okay, that's the same for literally every market. If I'm trading the foreign exchange market, right, and I'm doing USD, let's say JPY, one US dollar is the equivalent to 120 yen, whatever the case may be. But this is what we're doing. Now notice we've got a million different pairs here. So I like to narrow it down, and I do USD, and I just make sure that I always have US dollar pair. So I'm going to click on that one. I'll click on the Coinbase pair. I'll click on the index. I usually avoid crypto because we don't have volume. So anytime you see crypto, unless that's the only pair that's available, usually stay away from that one. Let's do Binance. Let's do OKX. And I think we're good to go. Let's just add Kraken right there. Okay, now what I'm going to do is click on this yet again, and I'm just literally going to add a T. So now we have BTC USDT, and you'll notice now we have a group of different pairs. They're all Bitcoin US dollar Tether pairs, which is a stable coin. And I know a lot of you have probably heard of Tether. Maybe some of you even traded your crypto for Tether on exchanges like Coinbase or Binance. I'm going to go ahead and add just a few of these. And now you'll notice we've got about 12 different pairs. I'm going to make this a little bit bigger so you can really see, and I'm going to get out of the way. We have quite a few different pairs on Bitcoin, right? We have BTC USD for quite a few of them. We have BTC USDT for quite a few of them. you'll notice that the prices on all of them are pretty close but relatively different. Over here we have $121,800, whereas right here on Binance we have $121,700. Why are these prices different? It's because these are literally Bitcoins that are traded on different exchanges, and they're never going to be perfectly aligned. So what the market relies on is this evening factor of arbitrage traders. Someone goes and looks at the Bitcoin, let's say on this exchange on Binance, buys it for $121,700, and then sends it over to, let's say, this index, or better yet, Coinbase, and sells it for $121,900. Because these are never going to be even, there's always an opportunity for arbitrage. However, this is a very dangerous game. It requires a lot of money, and some of the best traders and computers do this 24/7. So on average, the market will always kind of even out, and it'll always be somewhere in the exact same range. But that's why you're seeing a million different prices here, because these are all Bitcoin on different exchanges. And what we're focusing on is finding the exchange with the best data and the most data. Over on the right hand side, we also see a bunch of volume. Right here on Bitstamp, you'll see that only 453 Bitcoin have been traded in the last 24 hours, where on Coinbase, 2,000 Bitcoin have been traded in the last 24 hours. Right here on Binance, we have even more Bitcoin being traded. So if you were to aggregate or combine all of these, we have a total of almost, let's just say, 6,000 Bitcoin traded between these three different exchanges. And so for that reason, this is why I actually like something like an aggregator CoinMarketCap. It's basically taking all of the data from all of the exchanges and averaging out the price right here in real time. You can see that all of these exchanges are trading a stupid amount of Bitcoin. And so this is probably the best average price across all exchanges. And that's what the market believes is a fair value for Bitcoin. So coming back to TradingView, I'm just trying to find the best one that I'm going to use consistently for charting, and this does not have to be the exact same exchange that I use for everything else. So right here already I can see that Bitcoin on these exchanges is really low in volume, and so for that reason I'm just going to remove it completely. I don't need that chart because it's so low in volume. This one's same right here, 31. Okay, and if I click on it, it looks the exact same. That's totally fine, but it just doesn't have enough volume for me to get real proper data. So again, I'm just going to remove this one right here. Now we've got a whole plethora of different BTC USD or USDT pairs, and I want to find the best one possible for all of these. They all have quite a bit of volume. This one has less, this one has less, but maybe these charts have more data or time on them. And sometimes that also helps because we want to zoom back as far as possible to see, were there horizontal supports and resistances? Is the market at a point where it could sell off hard? And if you have a new chart with new data or not enough data, you might actually get the wrong picture and make a really bad decision about what you're trading. So I'm going to go ahead now and click on the weekly time frame. And as you can see, this is the perfect example when we're looking at OKX, the Bitcoin US dollar pair. And where that is right here. And it's actually one of the ones that I removed with only 31 volume. Notice how I use that as a filter tool in order to remove it to begin with. But Bitcoin obviously is way older than December of 2024, but that's actually when they started listing this pair on the OKX exchange. So I would never use this data in order to make decisions because I simply don't have enough. This is a perfect example. Clicking on the weekly time frame, just looking back to where we are over here, you can see that it starts on December 2nd of 2024. And again, we're not even looking at candlesticks. You don't even understand how candlesticks work that well just yet. Or maybe you do, but at the end of the day, if you just scroll over, and let me remove those tools a little bit, right here, and again, I can drag and drop right here, to the very first day of data, you can see this goes back to December 2nd. So for that reason, I would not use that one. Now what I'm going to do is I'm going to just start clicking through them. I want to make sure that I auto it out, and I can use my mouse roller in order to see all of the data. So let me get that out of the way a bit. And you can see when I scroll out to this chart goes all the way back to 2011 when Bitcoin was literally at about $1 to $5, all the way to $23 and up to $1,000, which is actually quite crazy, which means we have a crazy amount of data right here. And a decent amount of volume, but notice we only have 458 Bitcoin traded here. So this chart might not be as accurate as a larger chart with more data, even though it goes farther back. So I'm not going to delete that right away, but I'm just going to focus on which chart has the most data and goes back the furthest. So now let's click from these guys. Let's say the USDT pair. Notice this chart only goes back to 2017. For that reason, I'll remove it. There's one with more volume here and goes further back. Oh, interesting. This one only goes back to 2018. Guess what I'm doing? Removing it, even though it's got a lot of data. Right over here, this chart goes all the way back to 2021. Not enough data. I removed that one. BTC USD over here. Notice this one only goes back to 2017, even though this one has by far the most volume. I still like knowing what Bitcoin did in the past, and I would like this for every single chart I pull up. So for that reason, I will remove it because we have enough over here between 2 to 3K. There is no perfect solution for this, right? It's just you want more data and you want enough volume. So as long as it's in the thousands in the case of Bitcoin, that's totally fine. I'll remove it. This one doesn't have nearly enough volume, but it does go back to 2013. Still, we saw one that is older. Now, finally, we'll go to the index, and this one has 3,200 volume. This is tracking probably a conglomerate of exchanges, but you can see right here, when I scroll all the way back to the beginning of this chart, this goes back the furthest to 2009 at under a penny before it started hitting 60 cents up to $23, so on and so forth. And notice if I click on the L, right, and click off of it, it's going to be really weird and wonky. Again, just click auto and your chart will look like this. Now your chart's going to look really weird and wonky again if you don't click on the L. And the L is probably the most important thing that I'm going to teach you to use for this course. Now, the reason I'm not going to explain it is because a logarithmic chart just goes based on percentage gains, whereas the non-logarithmic chart does not use percentage gains, so it doesn't give you real perspective. But for the sake of this video, let's just click on the L, and at all times and situations, you want to make sure that you do that. And we can see that this chart goes back easily the furthest, more so than this Coinbase chart to 2015. Now, again, you might be trading on Coinbase. You might be trading on Blowfin. Totally fine. I just want the chart with the most data and volume. And so I used a process of elimination. And guess what? Anytime I'm going to take a trade on Coinbase, I'm still using this chart and this data and saying, oh, look at this. This looks really good to buy this dip, let's just say. And I'm not saying that right now. I don't know. We haven't looked at the chart. We haven't trained you this. But let's say you've done your work and now you're like, I would love to buy this dip because I'm seeing this on the chart. This data is live. I can see the countdown in 20 seconds. This hour is going to close. And guess what? A new candle is going to open. I want to long or buy this crypto. Guess what I would do? I would hop on over to my Coinbase account and buy it, even though I am not on the Coinbase chart. Totally fine, because all of these charts are going to act pretty similarly across the board because of arbitragers. So what we're going to do is add our second crypto to this watch list, and we're going to make it a little bit more of an interesting under the radar crypto that many people might not have heard of. And I'm just going to find a random one over here on CoinMarketCap. So go to CoinMarketCap, and let's just say for whatever reason you're like, I've heard of this Sky token right here and I really want to trade it, or better yet, even invest into it. We're not sure yet. All I'm doing is trying to pull up the right chart over on my TradingView. So you notice the Sky token has a Sky ticker. So what I'm going to do is click right over here on the plus sign, type in Sky. And then I'm going to do, notice how right here we already have stocks being listed on the NYSE. But if we do USD, you're going to see different US dollar pairs on Coinbase, Kraken, Pith, Bybit, BitGet, all of these different pairs. Now here's the thing. Anytime I see a crypto listed on a Coinbase and a Kraken, or either one, that's a good sign that this is a US regulated company, or a company that had to actually register with Coinbase in order to verify that they are legit, that they're trying to do a real thing, that they're a real company, that they're not going to screw everyone over. So this is actually a good vote of confidence that this token is legit. So I'm going to click right here on the Sky US dollar for Coinbase, and you'll notice that it's right here now. I'll click on that one. And I try to avoid perpetual contracts. We'll add this spot token, and you'll notice that there aren't as many pairs for this as there are on, let's say, a Bitcoin, because it's not listed in as many places. It's a far smaller crypto than Bitcoin, obviously. If I do USDT now, Sky USDT, you'll see different pairs pop up on Qcoin and random ones like KSEX and Weeks. I've never even heard of these things. Right here, we're starting to see different crypto pairs. So I'm only focusing on the pairs right here. Now we have 1, 2, 3, 4, 5, 6, 7 different pairs. And already I can see this thing right here at 0.08 cents is trading far more volume on this very first exchange than it is on most of the others. This one only has 126,000 shares of Sky traded, whereas over here we have 1.37 million, 1.38, 380K, and 27K. So I'm assuming this pair right here and this pair right here are the least valuable to actually use, but sometimes that's not always the case. Either way, I'm just gonna zoom out, when in doubt, zoom out, click log into auto, and right now we're looking at the Bitcoin chart. So I'm just gonna click through these pairs now. And as you can see here, click auto again, we don't have that much history on Coinbase, or as a matter of fact, on probably most of these, because this is a far younger crypto relative to a Bitcoin. And as a good rule of thumb, notice how this only goes back to September of 2024. If for whatever reason, all of these charts only go back to September of 2024, probably not a great crypto to be investing into, even though it has a vote of confidence from Coinbase. Because someone like Coinbase might go ahead and list this because there's a lot of trade volume and activity, and that's how they make their money. But at the end of the day, they could also as easily delist it when this thing doesn't do well over the long run because it's not doing as well or doesn't have as much activity or interest from the market. So I'm just going to click through all of these and see what charts look like and how far they go back. This one goes back to September of 2024. Notice this one goes back to January of 2025. So when this listed, it pumped really hard and then did what the other charts did, except this one started listing in January of 2025. So I would remove that one immediately just so I don't get confused and start clicking through it. This one looks very funky relative to the rest, which means something odd or fishy is going on. Notice how different this chart looks relative to the other charts. I'm going to remove that. I'm trying to find a consistent pattern here. I'm trying to find one that has the most volume and also has the best or most history. This one goes back to January of 2025, only 27K shares. So now it's between these three. So I'm going to go ahead and click through them again. Coinbase recently listed it. Maybe we zoom into the daily time frame back in July, but it has way more volume than this exchange right here. This exchange seems to be the best one to track because it shows me the real trade going all the way back to October of 2024. The chart looks very similar to this other one, except this one only goes back, well, this one goes back to 2024 as well. But between these three, notice that this one is the most volume relative to this one, but this one has enough volume, 1.39 million. And even though Coinbase has way more volume, it doesn't have as much data. So now I don't know where potential resistances or supports are going all the way back to October over here because we only have data from this year. So for that reason, I'd have to remove it even though it has more trade volume than the other exchanges. And because between these two, this one has the most volume and history, I'm going to remove this chart now and only focus on this. And as you can see, if we were only looking at the Coinbase chart, we would think, oh, look, this thing is getting close to a breakout for a new all-time high. But looking back, the reality is this thing has seen a lot of resistance up here. And again, we're not getting into charting right now. I'll teach you this stuff in a future video, but just looking at this chart alone, you can see that we have way more data on this chart and the proper one. So if I wanted to trade Sky on a Coinbase, a Kraken, a Blowfin, a Binance, at the end of the day, even though maybe it's not listed on Binance, wherever you can trade this thing, this is the chart I would be using. And guess what? It's on Qcoin. We have the most data now. We have volume. We're good to go. This is the chart that you're going to be using here on forward. And by the way, you're going to do this from here on out in order to add cryptos to your watch list so you can start bouncing around through them. So let's say you now added a few more cryptos to your watch list. Look how easy it is to just bounce around through each one of these cryptos. And here we are on the Ethereum chart. I click over here. We're on the XRP chart. I click right here. We're on the Sky chart. Guess what I do? I could trade all of these on the exact same exchange. I'm just using the best pair and the best data from the best source who listed it the longest ago and also has a decent amount of volume, so the chart looks best and most accurate. Okay, I'm gonna go ahead and click save. And so this is the final step in doing all of this. We've covered a lot in this section of the video, but this is all extremely important for you to be familiar with. And guess what? There are so many other functions and features that you can use, but we're just keeping it simple. I have my drawing tools. I can click between different time frames. We're logging it and autoing it out. We're clicking between our different watch list. I go ahead and do this. Everything looks clean and good on my chart. I have the highs and the lows. Man, things are looking good. It might be overwhelming, which is why you might want to watch through this section a few times. Get really familiar with this tool because this is going to be your bread and butter and best friend. I'm going to click save, and guess what? Again, if we went to TradingView, let's say we logged out or for whatever reason we X'd out of that tab. I go to TradingView. Guess what? Hover over products, super charts, and bam, everything is right here. I can click on my watch list and we're good to go. So now we're going to move on to the final section of this video and cover what these candlesticks actually are and what they mean. I know that we've kind of deep dived into this whole thing, and if you're not really familiar with candlesticks, this is just price over here. On the right, this is just $4,700 on Ethereum. But generally speaking, the actual candlesticks do matter, and we're going to focus on that right now. And now for the very final section of this video, and one that y'all have probably been waiting for: how to read a candlestick. I know we covered a lot on TradingView, but you kind of have a good grasp and a feel, and now you're getting familiar. Your brain has seen candlesticks often. Right behind me, we have a chart that I made that is very straightforward and simple to read, but before I get out of the way, we're going to cover the fact that in most charts or situations, the green is obviously going to be bullish or the price is going to be up. When you see a red candlestick, that typically means it's bearish or down. Okay, sometimes you'll see these flipped, you'll see different colors, people using different chart patterns, all this different stuff. We're just going to keep things simple. You see green, that means price is up. You see red, that means price is down. Now let me go ahead and get out of the way here. So right here, you can see that I have a price going from $1 all the way to $3. And again, these prices on our chart when we're actually on TradingView are on the right, but I really just wanted to simplify this and make it look as simple as possible. So we have $1, $2, and $3. We have a time frame from 12 a.m. to 1 a.m. In other words, this was an hourly candlestick. In other words, at literally 12:59, this candlestick was still over here, and then when it turned 1 o'clock, okay, this new candlestick opened, and over the course of 1 hour, this candlestick was trading and it actually sold off, and we know this because it's red. So at one point in time, when it went from 11:59 p.m. and turned 12 a.m., the price of this asset, or better yet, crypto, was exactly $1. And the reason I know this is because right here we have the bottom of this actual bar or body of the candlestick. In other words, this big green area right here is considered the body of the candlestick. Okay, on the upside, this is considered a wick. On the downside, this is considered a wick. So we have wicks going down to about 50 cents. We have a wick on the high going up to $3.50. Now, this isn't typical of a crypto that's trading at $1. That's a crazy amount of volatility and major gains. But I'm just showing you that for the sake of this example. We opened right here on the green. And the reason I know that this opened at the bottom here is because it closed higher than it actually opened. So if the market opened at 12 a.m. at $1, and over the course of this 1 hour period, it sold off at first, went to a low of 50 cents, and then buyers stepped in and bought it all the way up to a high of $3.50, literally at 12:59 p.m., or excuse me, I should say a.m., and the second before it turned 1 a.m., the market sold it off from $3.50 all the way to $3. Right here on the left-hand side, you see the close was higher than the open, which made it green. The price was up in that hour. The next hour, the market opened right where this one closed. Okay, so literally at 1 a.m., this thing closes at $3. Guess where this market opened? At $3. And some point in that 1 hour time frame, the market made a high all the way back up to $3.50, then went all the way down to a low of 50 cents, and then the market bought it back up, and when one 1:59 a.m. hit and the clock turned 2. It closed right here. So now we have our body, okay? In other words, the market opened right here at $3 and it sold off to $1. And if we were to remove the wicks at the end of the day, we went from $1 to $3, and then the exact next hour, it went back from $3 and sold right back off to $1. These are even-bodied candles, and they're very similar. They're exactly the same. I just wanted to show you what happens in this time frame. So the moment it turned 2, guess where the next candle opens? Right here. And that would be the start of this body. The low at some point in time in this hour, let's say, I don't know, at 1:43, it sold all the way off. We'd have to zoom in to really know what happened. But at 1:43, it sold off to 50 cents. Then by 1:53, it got bought back up to here, and it stayed here over the next 7 to 8 minutes before closing here. In other words, green candles open at the bottom, close at the top. Red candles, okay, open at the top and close at the bottom, which is why the price is down or this candle is red. Let's look at a few other examples. So on the left-hand side, you can see that we have a few different candles, and this is more consistent with what you normally see on charts, okay? At exactly 12 a.m., okay, the market opened at $1. We literally had no sellers or sell pressure below $1 because there is no wick below there. This was a very bullish candle, and this generally is a bullish pattern because when the market got bought back up, okay, got bought all the way up to, let's say, 325, and then in this period of time, maybe it was slow, consistent, steady all the way through 12, all the way close to 1 o'clock, got bought right up to 325, and then right before it turned 1 o'clock, the market sold it off, and right here, exactly when it turned 1, the market closed right here because it opened lower, right? The price is up, so this is a green bar, and closed right here at about 275. Then guess what? The next red candle opens at 275. So right here we'd see an open. This would be a green candle if we close higher than we open up here. But because it didn't, right, the market got bought all the way up to, let's say, 350, and then it got sold off all the way down to $1 before it got bought right back up, and then literally right before 2 at 1:59, 59 seconds before it turned 2, the market closed here. The next 1 hour period opened right here at the literal, let's just say this is $1.75 right here. But notice the difference between these two bars. First and foremost, the market's telling us a story here. The market's saying the price went higher than it previously did. In other words, this is still bullish even though it's a red candle. And the reason is because this is an inside candle. Well, how do I know? Simple. The body of this candle is far smaller than the body of this candle. This candle body is far bigger. The green one is essentially bigger than this one, which means this is an inside candle, or this body is inside of the body of this candle. Also, the low did not come below this low. So not only do we have a higher high right here, we have an inside bearish candle. So for this reason, this leads me to believe this is still a very bullish pattern. And we're going to talk more about patterns here in the short term, or better yet, in another video. Again, we have the exact same example, $3, $2, $1. You'll notice the market here opened where? At $2 on the green. At some point in time in this 1 hour period, it sold off to, let's say, $1.50. Then the market bought it all the way up to a new high over here of $3.50 before the marker turned 1 a.m., or better yet, the time turned 1 a.m., and then it got sold off to $3. Because we closed here, where did this one open? Right here at $3. Now, here's the funny thing about this exact opposite scenario of this chart over here. You'll notice the market had no more strength or buyers to push the price for a new range high above 350. Instead, we only got a push up to like $3.10 before the market sold off heavy, all the way down to like 25 cents down here. And then right before it turned 2 o'clock, it got bought up just slightly, but we closed at $1. So not only did we close below the green close of the candle, we went and put in a new low and failed to put in a new high. This is what you call call a bearish engulfing candle. Okay, and again, there's a lot of names that I don't want to get you confused on. You don't need to get stuck up on the names of every single individual candle. Matter of fact, I've been doing this for years and years now. I still don't know all the names of all the little patterns and all of the key nuances between this one or that one. Is that a doji, a dragonfly, whatever. There's a million different names. All you need to focus on is just what happened the hour or the day or the week after. Did we put in a new high? Is this a bearish engulfing candle? Now, the reason this is a bearish engulfing candle is because the body of this candle is engulfing the body of this one. We didn't put in a new high. We put in new lows. We closed lower. This is a bearish pattern. So I hope this helps. And if you need, go ahead and study this portion of the video a few more times, or just take a screenshot of this right here in order to really get a feel for the fact that the green candles, okay, always open low, close high. Why? Price is up. A red candle always opens high and closes low, and you could have crazy wicks in the middle. You could have no wicks, and all of these things tell a story. The wick tells a story, and so does the body of the candle. But we're going to dive more into that into a future section of this course. And so that is it for this video. I hope you learned something new. If you did, be sure to subscribe. Be sure to check out the resources down below, and I will see you in the next video, my friend.